Hey guys, welcome back. Patrick here. Another extremely volatile day in the market. A lot of meme stocks are moving, but in my opinion, one of the biggest pieces of news today is the fact that Hindenburg Research has released a hit piece on one of our favorite stocks, Draftkings, ticker symbol DKNG. Now, Hindenburg Research is one of the few short companies that I actually follow and think that most of the time they do a decent job of at least raising good questions. They uncovered Nikola, Lordstown's. But is this one overblown, or are they right about DraftKings? So the two main things, or three main things that they allege, in my opinion, is number one, that DraftKings would be involved with the black market. Ooh, illegal gambling. So that one is a big accusation that would have a lot of impact on their licensing, most notably, right? Second allegation is that the insiders of the company know that it's way overvalued and have dumped $1.4 billion worth of shares. That is easy to prove or disprove. And then the third allegation is basically that the company's strategy of dumping hundreds of millions of dollars in marketing, according to a lot of experts on the industry, well, that business model is not really guaranteed to work, right? They may be losing money for years and years and years with no guarantee that this is going to be fruitful in the future. So let's look at it. I'll show you exactly what I've done and what I think about this situation. I think that the stock right now has been really beat up, maybe a little oversold. I actually opened a position on the company today. I'll show you that right after the intro. But of course, please like and subscribe. You guys know it really helps out. Alright guys, a lot of people completely hate Hindenburg Research and shorts in general. Personally, I don't have an opinion, right? If I believe in their allegations, if it makes sense, then I'm going to be a little cautious about the company. And if I disagree and think that there are inconsistencies, then I'm not really going to follow what they say, right? But in this case, they're calling it DraftKings a $21 billion SPAC betting. It can hide its black market operations. So of course, we're not going to go through the entire document. I want us to mostly look at the top three allegations I was telling you guys about. And so the first part is they're talking about it as very, very shady with black market illegal gambling, and that's going to be a pretty big deal for DraftKings. Now, here's the thing that you have to understand is that when DraftKings came into existence, they merged with a SPAC, but also with a third-party company called SB Tech based out of Europe. Now, SB Tech, from this report and looking it up a little bit online, there are some things that look a little shady about the company. But what you need to understand is that DraftKings didn't buy this company for their revenues, and it wasn't really a growth vector for the company. All they cared about was the technology platform that they could provide, which was a sports book. DraftKings went from a daily fantasy sports company to a general gambling sports betting company. So they needed the software, and SB Tech was able to provide that. So that is one of the big distinctions that I feel like the report doesn't really talk about enough, right? So in other words, DraftKings as a company, like now that they're publicly traded and worth multiple billion dollars, they couldn't care less about the small revenue that SB Tech provides through possibly shady black market operations in Asia, and even they said that they had ties with Iran before, right? So DraftKings, if they need to, they'll just kick them to the curb. The only thing that matters to them is the technology platform. Right now, they already have the app up and running. They're opening in new states every time one of the new states opens, and they have the app to support these new players. So that's all they needed SB Tech for. They don't really care about their revenues that they're providing. So that is one of the main aspects of the report that I feel like they're making it very sensationalized, sorry guys, when they say it hides its black market operations. Does anyone really believe that DraftKings, as a US-based operations, really cares about like an illegal website in Asia that accepts like Vietnamese players illegally? Of course not, right? If it's the case, they're just going to flush them out and they'll just write that off of their revenues. That's not a big deal. I feel like this is way overblown, but you know, that's part of the short report. They already have their short positions open, and they're trying to make the share price drop, which they were successful today. So that's the first thing that I wanted to pay attention to, is like their main allegation about the black market. In my opinion, it is way overblown, right? So maybe it is the case, but I don't think that Draftkings is going to have very high liability for it. If anything, they can just cut their ties with those bad actors, keep the app, you know, keep the software, and they're good to go. Now, if we look at the second and third accusations by Hindenburg Research, there's nothing really that we can argue about. It is their opinion. Like, it's not illegal or anything like that. They say that the company is overvalued. It trades at 26x the last 12 months sales, and that because the company is overvalued, the company's insiders have sold $1.4 billion worth of stocks, and that the business model of just investing so much in sales, in acquiring customers rather, right, is not really proven long term, and we don't know if that's going to create enough brand loyalty to generate a profit in the future. Well, the thing with that accusation is that it might be true, but there's nothing illegal about it, and it doesn't really make it a good stock or a bad stock. There are a lot of companies out there that we felt were overvalued for a long time, like Tesla, and it went to $900 before it started to go down, right? Like, the valuation of a company in a lot of cases is very, very subjective, and everyone prices it differently, especially when there's no track record of profit, so there's no real PE ratio, right? It's all based on future projections and how they're going to do in the future. So again, this is very, very difficult to argue against, but all I'm going to say is that personally, that is one of the reasons why I personally have cooled off on Draftkings a little bit, right? So it is absolutely undeniable that the company is spending way too much. These were the losses in Q1 2020, right? 81 million, and they had spent 57 million on marketing and sales. And then Q1 2021, they spent 228 million in marketing and sales, and they got a loss of $324 million. So the company is generating tremendous losses. Every time they enter a new market, they just pour tons and tons of money. And in my opinion, they're not really very, very efficient with their marketing, right? Their business right now is acquiring a massive, massive database of players, literally anyone they can find at any cost, and then they want to convert them over time and generate a profit long term, right? Everyone knows about DraftKings. Their market penetration in terms of like brand awareness is extremely, extremely high, way higher than some of the newer ones. Like, a lot of people right now are looking into Betway, right? Well, no one knows about Betway, but everyone knows about DraftKings. So that's the company's strategy. I personally have cooled off a little bit, right? Because of that, the mounting losses that the company hasn't really proven yet that they can turn the corner. But does that warrant a short report, right? Everyone knows about this. There's nothing hidden here. Right? It's not like the company is misleading us about their losses or anything like that. So that's another thing that I feel is completely overblown by Hindenburg Research. There's nothing illegal here. If the company insiders sold shares, well, the share price went from $10 to over $60 at some point, right? So it is very normal that they would want to take a profit, and no one forces people to actually buy it at those prices if they feel like it's overvalued. So looking at the report, it's pretty obvious to me, and this is very, very different from the situation with Nikola or with Lordstown. They're not saying that the company is a fraud, or it's not like a Ponzi scheme or anything really nefarious. They're talking a lot about what happened in the past with SB Tech, and maybe there's some leftovers that the company is not really aware enough about, or is not self-policing enough. Now, what's going to happen is there's going to be an inquiry, and if this happens to be true, they're going to correct the problem. They're not going to jeopardize the entire company over like a little part of the business linked to SB Tech and their subsidiaries. Now, if we look at the chart, you are going to see some very, very interesting data for this company. It has been very, very beat down over the past couple of months. So look at the volume today, 83 million shares compared to 16 million. This might turn into one of the meme stocks. There's already been chatter about it on Wall Street Bets, which has not really been like that big of a target yet, of course, compared to AMC and the other things that they're focusing on. Wish was the big one today, but it has moved the share price down. So it actually opened down a lot, right? It gapped down, but then very rapidly, it actually went back up to 48 to 48.50 is where it's been hovering over the past several hours. Now, the market's not closed as if I'm filming this, right? So by the time I record the video, maybe it's going to shoot up or down. I don't quite know yet. But what I've personally done is I opened a trade on this stock, actually long, not short. Like, it's too late to short the stock, in my opinion, right? If you were going to short it, you would have done that before when it was over $55, $60. Now, in my opinion, it is oversold, and since the report is not really that like damaging to the company, in my opinion, I feel like it's going to rebound fairly quickly, especially if like all of the people on Wall Street Bets decide to actually buy into the stock. So personally, I bought calls for July 16th at $40. Of course, I went deep in the money because that really lowers the amount of extrinsic value, and it also increases your delta. So to make it really, really simple, because it's far in the money, every dollar that the stock goes up, you get a bigger proportion of that, as opposed to, let's say you bought $55 calls. Well, even if the stock price went up by $1, you would only get, let's say, 25 cents, while with this, you're going to get 80, 85 cents of that increase. All right, so currently I'm up $934. I didn't go big on this. I only put in $4,000, or rather 37, and right now it's at 47. So we'll see how that develops, but that's how I'm playing it. Small bet on it. I think it's going to rebound. And, you know, right now I already have some intrinsic value in this position, and maybe I'll just exercise them if the stock goes up, and I'll keep it in my portfolio. All right, guys, before I wrap up the video, I want to show you some of the supports and resistances for this stock. The good thing about it is that we have a chart history for this company, right? So it's not like some of the newer SPACs where we have no idea what happened in the past. With this one, we can clearly see supports and resistances. And you have this one at $40. In a previous video, I had mentioned that if it dropped under 40, let's say 37, I want to add more shares to it. Well, we actually never saw that happening. It literally bounced off $40, and we had reached 55 recently, so I never added to my position. So $40 is one of the key points you want to look at. If people take this short report very seriously, like today, it did go down 4.66%. We could see $40 once again. After that, other levels is $44, so a little higher. And then all the way in November, it had this big drop that brought it to $35. So $35, $40, $44 are numbers that you want to look into. I mean, if it drops under 44, then you'll want to be really careful about $40. And if it drops under that, you'll want to be really careful about 35. On the top end, right, recently it just hit 55. Before that, we had this period here at $60. And then just in March, so not too long ago, like 2 months ago, it actually went a little over $70. Right, so there's a very, very wide margin for this stock. It can go down a lot and can go up a lot. So that's what makes this stock very interesting to trade, right? You're going to see some pretty big movements. So I'm not exactly sure where it's going to go. I feel very confident with my position. I feel like it's very low risk, high reward in this case. So let me know what you end up doing. Like, are you going to be trading this one? Do you have a long position in DraftKings? Let me know in the comments, and I'll see you guys in the next video.